In this episode, we speak with Alex Venino, Managing Director, and Spencer Miles, Technology Operating Partner at Corsair Capital, a specialist investment firm with approximately $14.6 billion invested across buyouts and infrastructure. Founded as a JP Morgan private equity practice in 1992 before becoming an independent partner-owned firm in 2006, Corsair specializes in controlled buyouts in the payments, software, and business services sectors, alongside value-added infrastructure investments. Alex joined Corsair in 2018 and is a member of the firm's investment team, serving on the boards of portfolio companies Spring Venture Group and HungerRush. Spencer works closely with portfolio companies on technology transformation, AI adoption, and operational value creation, drawing on more than 25 years of software engineering and technology leadership experience. I am your host, RJ Lumba. We hope you enjoy the show. If you like the episode, click to follow.
RJ Lumba is the managing partner of Growth Cap and the executive chairman of Market Insight Media. He is the host of Growth Investor, a podcast featuring today's best investors, executives, and founders. In the minutes ahead, we'll uncover insights and strategies for accelerating growth and succeeding in business.
Alex and Spencer, thanks so much for taking the time to chat with us today. It's a delight to be with you.
Yeah, thank you, RJ.
Thanks, RJ. Great to be here.
So, interesting fact, when I was an investment banker, I think it was back in my Merrill Lynch days, I did interact with Corsair quite a bit on a transaction. It was like a subprime issuer. This was like probably in 2010 or so. Jeremy Schein was the partner on that deal. So my knowledge of Corsair is a little bit dated, but I've been trying to keep up. For the benefit of our audience, Alex, maybe you could give us some background on Corsair.
Yeah, no, sure. Happy to. And again, thanks for having us and happy to share some of our perspectives. It's funny you started with that anecdote, so you have a little bit of the background. And, I think that context maybe will help kind of ground us for this topic and where we are today, what we're doing. But so Corsair, as you alluded to, the firm's been around for 30 plus years. We are a sector-focused investor investing in financial services, financial technology businesses in the middle market throughout kind of North America, the UK, and Europe. We're headquartered in New York with an office in London, just under $4.5 billion of AUM in our private equity business. And again, everything we do in our DNA kind of goes back to that financial services space and financial institutions. Today, we invest really across kind of services, technology, and distribution businesses that touch that ecosystem. RJ, as you're probably aware from your banking background, it's a large, important part of the economy. As Corsair, we've lived through multiple cycles, economic cycles, rate cycles, technology-driven innovation disruption cycles. So we've, over time, built this sort of level of comfort investing in that complexity. And I guess I'll kind of bring us around to where we are today in that this is very much, or our lens on AI and technology is very much a natural extension of our evolution and our heritage versus a net new strategy. And just for myself, been in managing director with the team in New York and been investing in financial services for the better part of 15 years now.
And you sit on a couple boards focused on the insurance sector, it seems. Is that kind of your primary focus?
It is, yeah. I've worked across our different spaces. So I've done a lot in kind of payments, FinTech, insurance, some asset and wealth management. But more recently, I've really been leading our investment efforts within the insurance space broadly.
And, I noticed kind of the, how you position Corsair as growth focused, and hence you have, a whole group of operating partners, and, would be really interested to see how you integrate kind of the operating partners and maybe value creation into your investments, your portfolio companies. So maybe this is a good segue into introducing, Spencer. Spencer, if you wouldn't mind telling us about your background and kind of where you sit.
Yeah, absolutely. So I've been with Corsair for about 2 years now as an operating partner, looking over technology, product, AI, data. My background, as the title would suggest, is in that area. I've been a lifelong software engineer, started coding when I was or so, did my first startup, At 18, that took me through my late 20s, early 30s, co-founded a few startups, and then did a complete pivot into the largest company on earth, Walmart. Was at Walmart for about 7 years, leading up their omni-channel effort, essentially stitching their physical retail stores to the digital world, and also led up their mobile team. After that, I was at eBay for 4 years, leading some pretty complex modernization efforts for them. And then Corsair so at Corsair, I lead our technology due diligence practice, which has really changed quite a lot since I came in part due to what we're able to do now with AI. And then I also work really closely with our portcos, our CTOs, CPOs, engineering teams, again, heavily focused on AI the last 18 to 24 months. The world has completely changed since right around the time that I joined Corsair.
Mm-hmm. I'm curious, when you start in on a new company that Corsair might be evaluating as a potential investment opportunities, do you frequently find like, oh, we can dramatically improve, the technology or the software, that this company is using or driven by, or maybe if it's a company that's offering software, it's like, oh yeah, we can 3x or 5x the efficiency of this?
Yeah, it's a great question. I would say our thinking on this is actually shifting a little bit over time. I mean, the challenge with software, and especially in the mid-market, is, there's a large cohort of companies where they started on their software journey 20 years ago, have done a lot of M&A, and where they're at today is a bit of a Frankenstein, a legacy stack, lots of disparate systems that haven't been properly integrated. And generally, when we look at companies like that, it doesn't make the most sense to invest in them because it's going to take so long just to get the software to a state where, okay, we now have high engineering velocity. We can move at the pace we need to complete the swing on our investment thesis and create the value we want to need. It's a huge amount of work just getting to that point. So I would say over the last couple of years since I've been here, we've generally declined to proceed on those. We're starting to have some conversations now, though. I think with the pace of change that's come from Gen AI, you can now pay down that technical debt and modernize these systems much, much faster than you would have been able to before. So I actually can see us moving into potentially a new era where instead of passing on companies like this, we can look at it with a different lens of, okay, with Gen AI and a really focused team, how quickly could we refactor and modernize this code base? Something that literally 18 months ago would have taken $10 million and 3 to 4 years. I think that can now be compressed into a year and a half, and a fraction of the price. And I'm saying this because we're actually seeing this play out at one of our portcos today, where we're taking on a pretty complex modernization that we just couldn't have done 2 years ago with existing capital constraints. And we're now seeing just massive leverage from Claude Code on being able to advance the ball on this.
RJ, what I would just add on that to what Spencer said, and kind of alluded to it, is like, we've been methodically building out this strategic resources group that Spencer is part of. That's 7 individuals, soon to be 8. And as you kind of heard, it's very integral to our value creation strategy. But this is from the first conversation with a potential target, or even before, honestly, helping really shape and inform our investment theses across these different subsectors, and thinking about where can we find really the best management teams, founders, executives, to help them execute on the opportunity in front of them, but knowing that it's not about anymore just, do you have secure and stable systems, a data strategy, are you using NetSuite, are your prior acquisitions integrated, but it's a whole different lens on transformation through AI. And, Spencer and his team help us ask sharper questions, extract better insights from the data earlier on that help us be more selective. So when you do get into the lower middle market and middle market where we focus, these are good, growing, profitable businesses but we find that almost always there's a different set of capital allocation decisions, people decisions, technology initiatives that will get you from, call it 50 or 100 million of revenue to 3 or 500 million of revenue. It's just very different scaling through that phase. So that's kind of what we're focused on with this team.
Yeah, and Alex, do you find that because you have this new maybe view or perspective on companies and what opportunities they present, has that broadened the set of companies you'll now kind of look at? Because, with AI and how you can leverage, the technology, maybe a company that was like a slow grower and was a little bit kind of sleepy, now you're like, well, they've got this customer base that they've had for 10, 15, 20 years. We could do something with that. So I'm just curious, like how AI has changed your opportunity set over the last 2 to 5 years.
Yeah, it's a good question. So we've never shied away from complexity as a firm, but to your point, it has opened up the aperture a bit on understanding how we can transform these businesses and give us more conviction, I would say, in generating the right risk-adjusted returns we need for our investors and our clients when the story is not maybe as straightforward or as clean as, just paying a market clearing price for a great business that's growing 20% with strong margins. A lot of times what we find is the businesses we invest in, they do have some mix of proprietary data, embedded workflows, regulatory or operational complexity that underpin kind of deep customer relationships. And this lens allows us to in the underwriting process and in our financial model, kind of build conviction around where the kind of the levers are that we can pull. So whether it's believing a business that today has a strong customer base, but has not really been able to monetize it to the optimal level, being able to help accelerate that through cross-sell, upsell of other products they don't realize they're kind of sitting on, or just thinking about efficiencies and driving efficiencies through the cost structure. Maybe a business that one point or historically would never really be able to run more than like a 25, 30% margin. Now you may be able to take that company and help them run at a 35% terminal year margin. And that makes a big difference in pricing these businesses and kind of underwriting out of the gate.
One more question before I switch back to Spencer. How have you seen valuations adjust, if they have? I'm hearing different things from private equity and growth equity investors. Some view like the market now is opportunistic. Some others maybe are definitively shying away from traditional software. How do you view the market, the overall kind of sentiment around software, and what have you been seeing valuation-wise?
So I would say there's obviously been a bit of a re-rating, especially in the public markets when you look at some of the software businesses, the SaaS apocalypse, if you will, that's transpired. But there's been a re-rating in other sectors too. Look at payments, look at insurance, where they're still just cautious around terminal values, where the winners and losers are going to be in these spaces. And a lot of the businesses that maybe were traditionally thought of the 800-pound gorillas that were steady growth, acquiring to build out the capabilities might be more challenged longer term. And we don't have a crystal ball. We don't pretend to. I think the past can only really inform us so much about the future direction of travel. But if you have a clean story, really good metrics in this market, there's capital to either do a recap or to do an LBO to support that. Anything that's less than that kind of A+ quality, there's a lot of, I think, hesitation and a lot of caution just because people don't quite know yet who the winners and losers are and how this is all going to shake out.
Mm-hmm. Spencer, switching gears here, is there typically low-hanging fruit when you start your relationship with a portfolio company? Corsair has made their investment, and you can quickly identify areas to help the company. And then I guess as a part of that, is there like a playbook?
Yeah, I don't think there's a universal answer for this. Yes, there is always some low-hanging fruit. It very much varies business to business. On the playbook side, there's a spectrum on this. We are not on the extreme end of that. We have a playbook for everything, and you will follow this to the letter of law. I think Corsair is much more collaborative in that regard. We do have, a number of best practices, and we're strengthening our posture on that. But ultimately, we we're big on collaboration, and every business is different and unique. And a rigid playbook to that doesn't make the most sense to us. On the low-hanging fruit piece, I mean, I think especially with AI, there are some pretty obvious places that we've seen across our portfolio where we like to focus. I would say the two big ones where we're seeing the biggest uplift thus far, and again, it pays to focus here and not go too broad, but pick a few areas and go deep. And that's really product and technology and the go-to-market side. And that's where we've been putting the bulk of our efforts on getting the most AI leverage because we see the most value creation opportunity in those functions.
Mm-hmm. Spencer, what are you most excited about? Like just in general, like as a technologist and having been coding since you were a kid, like what's most exciting to you about technology and business?
Yeah, I mean, what has happened over the last, I would say really 12 months was when the models got really good enough to write pretty complex code to where English is the new programming language.
Mm-hmm.
It's that simple. Right? If you look at software engineer over history, we're always layering in new abstractions, going back to, if you started coding in the 80s, you were literally writing in assembly language. I don't know how to write in assembly. I came after that. We had new layers of abstraction on that. And now anyone can write code. I mean, we've gotten our deal team, our other operating partners who've never written a line of code in their life, they're now in Claude Code daily, creating internal products that we're able to use. So that democratization of coding to where now anybody with an idea can quickly create a prototype. And, there's a difference. If you're trying to deploy these things broadly to paying customers, you still need engineers 100% for that, right? But for internal tools where getting to 85% is good enough, that's really exciting to me. And then on the customer facing engineering side of things, I mean, just the sheer velocity that you're now able to get if you do a lot of things correctly is pretty astounding, but it doesn't come for free. You don't just give Cursor or Claude Code to your engineering team and 2 weeks later have a 2x, 3x increase. Oftentimes, you'll have the opposite. If you don't lay the proper foundation of best practices on the product and engineering side, it can actually backfire on you. And you can end up with, you're now pushing more code and more bugs and just creating a lot of churn for your team and your customers. So there's a lot of work you have to do to be able to enable the velocity gains on that side. But when that happens, it's pretty amazing.
Mm-hmm. Alex, it was once described to me by a friend who was building his own private equity firm, and he's now, quite successful, multiple funds in. And he was successful, he said, in the fundraising, not only in like generating good returns, but, building a great platform. He said, my operating partner is like the Michael Jordan on this team. My operating partner is the one that creates all the value. This was in the med tech space, so it's a totally different space because he's been through this so many times and can create pre-AI. But I'm wondering if you, in a way, view it that, I don't want to put words in your mouth, right? But is there an element to this where your operating team really is driving tremendous value? And like, can you give us maybe some anecdotes?
So we've invested in this team for that reason. I mean, they, Spencer, obviously being a very critical part of that, they speak the language in a lot of ways of the executives and management teams we meet. And so they are with us side by side in fireside chats and in early, bilateral discussions with potential opportunities. They meet during the diligence process, all of the functional leaders of a company we're considering investing in, because they speak the same language. And many times they've navigated the same sets of challenges and obstacles and just help bring fresh ideas to the table that is way beyond what, I'm going to be able to do as the private equity kind of deal lead. Interestingly, especially in the middle market and lower middle market, again, a lot of this actually starts with an exercise in change management. And it's, do you have the right people in the right seats with an open mind to thinking critically about how have they run their business in the past and how that's going to look different in the future? So it boils down to the people. But then once you have the right people, helping put some real meat on the bones of like, think about the traditional 100-day plan for a private equity deal. You might be a slide or two in the IC memo, and then you kind of look at it post close and you think, all right, well, let's start setting up some calls and let's get going. That's happening throughout the diligence process now. I mean, and it's happening in a much more real way because you have folks like Spencer, and we have a few other gentlemen in talent and organizational development, in sales and go-to-market, in product, that are able to really dig in deep with the functional leaders at our companies, at our portfolio companies, and help drive that value. So make sure there's accountability, overlay kind of OKRs around this. So we're actually seeing this come to fruition versus, again, it just being a slide in the deck, or AI is like a slide in the IC memo. This is like the rubber meets the road, really, is what I would say.
Mm-hmm. I get, a fair amount of feedback from different CEOs about what it's like working with various private equity, growth equity firms. I'm wondering what you could tell a founder or CEO or management team of a company about what makes it different, what makes Corsair different than maybe other partners. Because like a lot of this comes down to that interpersonal relationship with the CEO and management team and how that's going to bode for them for the next 5-10 years, however long the whole period is. So that relationship is so important. What can you share about maybe the partners and managing directors at Corsair?
That's exactly the right question. And again, it goes back to that, especially in our segment of the market, it boils down to people at the end of the day. To your point, RJ, convincing the people on the other side of the table to transact with you is a lot about building trust. Obviously, it's about giving them an outcome that makes sense and is paying a market price for the business most times, but it's building trust with the people across the table. And I think from the Corsair standpoint, we kind of know what we're good at. We have a lot of learnings and scar tissue from things we have not been good at or had to, adjust. And we try to bring that to bear early on in the conversation. I think being a sector specialist also helps. So we walk in the door, it's not 101, what does your company do? We're not just regurgitating, AI slop back at them. We're actually already a layer or two deeper on their business and helping them think about how do we double or triple their plan. Like if they want to go from 50 to 100, can we make that 200, of revenue, or can we help them get there faster? So I think it's building trust. It's knowing their businesses right away and having a perspective on an investment thesis that's informed by that sector knowledge, and then helping them really realize those growth plans. So we don't force a one size fit all, as you kind of heard Spencer say. We don't have 1,000 playbooks that we roll out and say, this is how you're going to do it. It's we're backing you, backing your vision. Let us help you bring that to life. And Spencer and the Strategic Resources Group are a critical part in that. And the last thing I would say, not to overemphasize this point, but I do think it's, RJ, you kind of said you're going to spend a lot of time with these people over 3, 5, 7 years. Being just good people, high level of integrity, I think helps as well. I don't know if Spencer, you'd add anything to that, but that's...
No, I think you nailed it. It's all about people, collaboration, and trust.
We're entering the tail end of the conversation. I usually have a couple ending questions that veer more towards the personal. Maybe we'll start with Spencer. If you could just tell us a little bit more about yourself. I mean, you alluded to coding early, but where are you from? Where'd you grow up?
Yeah, I grew up on the Oregon coast in a very small 4,000 person farming and timber town, and didn't really love living in a 4,000 person farming and timber town, and hence teaching myself to code, and built my first age 18. This was 1999, 2000. It was a webmail product. Sold licenses as an 18-year-old to companies like BMG Music and NASA and Raytheon, and that paid my way through college.
Amazing. Alex, how about you? Where are you from? Where'd you grow up?
Hard to follow that. Pretty different. I grew up in North Jersey, just outside New York City. Went to school in Boston. Started my career in quick stint in accounting, but quickly realized that's not what I wanted to do. So got into the investment banking world and ultimately pivoted to private equity. But look, for me, it's really more of finding Corsair, and I think finding a bunch of people that I really enjoy kind of coming in and working with every day is super important to me. And I think we have a really good collegiate culture here that allows kind of people to spend time on their hobbies, do things outside the office, and kind of be with their families. And all of that stuff kind of comes together again to being a full kind of person who, bringing it back around to the deal side, like people, you can kind of relate to people. And that's kind of like what I like about being here and being in this seat. But I don't have a fun story like Spencer coding my way or selling products to big companies to get myself through college.
You are from a great state, though. I was thinking, I bet you he's from New Jersey, because I'm from New Jersey. So last question, and then we'll start with Spencer. Can you tell us about a person who has had a profound influence on you?
Well, professionally, gentleman who leads up our operating partner group, Daniel Eckert, is without a doubt the smartest individual I've ever worked with in my career, and just has some of the highest integrity. We worked together at Walmart. That's how I ended up at Corsair. I built out an engineering team to support the omni-channel transformation that he was leading. I built up that team and office in Portland. And at Walmart, he was an incredible mentor to me. And when he reached out to me a couple of years ago about Corsair, immediately picked up the phone. It was one of those people where you would follow anywhere. So yeah, Daniel has had just a tremendous impact on me, and he's done a phenomenal job building out our operating partner team here.
Excellent. Alex?
Yeah, you don't mind. I'll say a personal one. It could be, a little trite, but I'll say my parents, honestly. I think that I'm one of 3 boys, and I have a 4-month-old at home. They're just incredibly selfless, high integrity people who have just continually put themselves second to us and supported us and sacrificed for us. So we have a really close relationship with my family. And I think almost by osmosis, I guess, like them leading by example helped me figure out the kind of person I want to be and kind of bring that to work and to my personal life every day. So I'd put it to those 2.
Wonderful. Well, Alex and Spencer, thank you again for taking the time. It's been a great conversation.
Yeah, thank you, RJ.
Yeah, thanks a lot, RJ.